The last week of data for the year in the US real estate market is in, and it may surprise you, but pretty much all the signals for housing in 2024 are pointing for growth now. Inventory is slowly but steadily increasing over last year, which means slightly more options for home buyers this spring. Sales rates are climbing too. We have more homes going into contract each week now than we did a year ago. So supply and demand are climbing together. Home prices are inching up too. Prices are not rising uncontrollably like they were during the pandemic. They're much more stable now. But this implies that there are more than enough home buyers at these prices and these mortgage rates to keep the activity happening in housing. While a robust housing market is generally a positive thing, this is not all good news to every person. Home sales volumes and prices are increasing, yet we still have intense affordability crisis in this country. There are millions of would-be homebuyers who are simply priced out of the market. The current data for housing supply and demand, all the leading indicators for 2024 indicate that affordability crisis is unlikely to improve this year. Maybe we get cheaper mortgage rates and that will help payment affordability, but remember that cheaper rates means more buyer competition. And since demand for houses is already pushing prices a little bit higher, more demand means more upward pressure on home prices. At Altos Research, we track every home for sale in the country every week. We track all the pricing, all the supply and demand, all the changes in that data so that you can understand it immediately as it happens. I'm Mike Simonsen. I'm the founder of Altos, and it's now a new year, 2024, so we have all the data for 2023. Let's look at what the data tells us about the real estate market for 2024. The year finished with 513,000 single family homes on the market. That's fewer than last week, of course, it's the holidays, but it's almost 5% more than last year at the end of 2022. Each week, sellers are easing back into the market a little more than last year. The defining characteristic of 2023 was how few sellers we had. Each year that mortgage rates are elevated means fewer people are going to be locked into the low rates, so our resale inventory will continue to grow. I've illustrated 10 years of inventory history here, and you can see that we have slightly more homes on the market now than last year. That gap is growing each week. There are still 34% fewer homes on the market now than in 2019. That gap has been narrowing. Higher mortgage rates means greater inventory, and over the next few years, if rates stay high, you can imagine that inventory will build gradually back closer to the older levels, a few years. This is national data, and it's not the same pattern everywhere around the country. Texas, for instance, is looking like it's going to get statewide closer to pre-pandemic inventory levels, maybe this year. Much of the country, though, is still at record lows. Here's what to watch for in the next few weeks in the inventory numbers. Does inventory start climbing in Q1 like it used to? Or do we have more buyers than sellers and inventory falls into Q2 like it did last year and recent times? So a year ago, we were expecting a slowing housing market and a slowing economy to help the inventory of unsold homes build in Q1. But at the time, mortgage rates fell and buyers jumped in. So in 2023, inventory fell all the way into May before finally starting to build. So will that pattern happen again this year? If you look at the 2019 curve in the middle of the chart, where I've drawn a vertical line, you can see how inventory used to turn flat right after the new year. So that's the signal we're looking for this January. Does inventory look more like 2023 or more like 2019 with the year's progression? So the supply of homes on the market is slowly improving. When inventory is growing relative to last year, the first thing I want to look for is imbalance. If inventory grows and sales volume falls, that would be a bearish signal. But that's not what's happening. What's happening is that sales are also growing versus the same week a year ago. Uh, Over this last holiday week, in fact, there were 20% more new contracts started than the year prior, 20% more. In this chart, we're plotting the new contracts pending each week compared to the same week the year prior. There's a dotted line at 0. When the home sales market is expanding, the data is above the line. When the market is shrinking, the data is below the line. All year long, last year, we were below the line. All year long, the pending home sales numbers were declining. If you follow the NAR pending home sales data, the most recent prints were at a rate fewer than 4 million annualized. In November, we finally shifted back to growth. So we're now consistently measuring more new contracts started than the year prior, consistently now. So now this most recent week, this 20% jump is the holiday week. So and this is growth off a very low level. So don't read too much into it. Next week it could dip again, just due to like where the holiday falls in the week. But it is notable that the bounces in this data continue to bounce up, not down. If the 20% sales growth rate were to continue, for example, that implies nearly 4.8 million, nearly 5 million existing home sales in 2024, up from 4 million in 2023. Like, wouldn't that be a surprise? Okay, so that's new contracts each week. When we look at all the homes in contract, because they usually stay 30 to 45 days, we've crossed a growth threshold in the new pendings as well. So there are now 258,000 single-family homes in contract. That's 2.4% more homes in contract now than a year ago. So the sales are obviously growing in 2024. We had 51 weeks in 2023 with fewer sales in the pipeline than the year before, but that gap has been closing, and the last week of the year, we crossed over into growth. We now have more homes in contract than the year prior. In this chart, the height of each bar is the total number of single-family homes in contract. These are the sales pending. The light portion of the bar are the contracts started each week, the new pendings. That's the data we just looked at. The new pendings each week have been climbing for several months now, a couple months now. And finally, we're at the stage where the total number of contracts are greater than the last week of 2022. This tells me that we're pretty much guaranteed to complete more home sales in 2024 than we did in 2023. That is barring like some black swan event, of course. If the economy slows this year and unemployment starts creeping back into reality, one place we'll be able to trace the impact of housing very quickly is here in the pending sales data. As of right now, the housing market is growing. We've been talking about sales volumes, the number of people buying homes. Sales rates, however, are different from prices. We could have a year where home sales growth, but prices remain flat. As of right now, the leading indicators for home prices in the US are also showing some strength. As of the end of the year, price cuts for the homes on the market were declining. Fewer sellers feel the need to reduce their asking price. And that's because the buyers are there. And I've been illustrating the buyer demand so far in this week's video. We are starting the year with 34.8% of the homes on the market having taken a price cut from the original list price. That's 150 basis points fewer than last week. The curve happens over the holidays and into the new year as we get fresh inventory, so that's not a surprise. Price reductions are, though, now in what we call that normal range. Normally between 30 and 35% of the homes take a price cut before they sell. In this chart that we've highlighted, there's a gray band in the middle. That's the normal zone. Each line here is a year. 2024 at the very left end of the chart here is starting the year just under 35%. That'll continue to fall in the next few months with fresh inventory. The question is how far? And so here's how to read this chart. Price reductions peaked at 42% nationally in November of 2022. If you follow like the price indexes like the Case-Shiller, you'll know that home prices hit their recent low in April, 5 months after the price reductions. But by April, we could already see the red line here was below the normal band. We could see that there were fewer sellers needing to cut their prices. So even while the headlines were reporting sales prices falling, the leading indicators were already on the upswing. So we ended the year with home price gains of 3 to 5% nationally, depending on which index you use. So in January and February, this coming year, watch this price reductions trend. If it falls below the gray zone, you should expect home prices to climb in the second half of the year. Home price trends in Q1 really inform the view of the whole year. The median price of single-family homes in the U.S. is now $415,000. That means we finished the year with home prices up about 3% over last year. That's not a roaring market by any means, but let's call it price stability. It means that American homeowners gained equity in their already strong financial position. The leading indicators for 2024 are looking similar. None of the indicators are pointing down for home prices. We've already discussed how inventory is climbing and the sales rate is climbing too, and prices are looking to climb in 2024 as well. It can be a little hard to grok about how home prices can be inching up when mortgage rates are so much higher than they were a few years ago, but the observation is this: consumers are more sensitive to changes in rates than to the absolute levels of rates. So as rates settle into the 6s or 7s this year, expect more sellers and slightly higher prices. If rates jump back over 8%, you'll see that impact very quickly here, especially in the bright red line. You'll see it in the price reductions too, which we just looked at. But here, the bright red line is the price of the new listings each week. This week at $355,000, the price of the newly listed homes is nearly 5% higher than last year. Like the sales rate data earlier, this is a holiday week, so don't read too much into that 5%, but it is notable that it keeps climbing. The first week of January has the lowest price point all year, and then prices start climbing with fresh inventory in the next couple of weeks, and so we're going to watch how steep the red line, the bright red line, climbs. Here's what we're watching for with home prices. Right now, all the leading indicators are pointing to sales and price growth in 2024. None of those signals are super aggressive like they were 2 years ago, but they are consistently positive. So I'm not bullish enough on the economy to foresee big price jumps in 2024. But on the other hand, I've been too bearish on the economy for 2 full years. I keep expecting recession. So I don't know. What the hell do I know? I don't forecast the economy. But what we do know is that as of right now, the housing market for 2024 is poised for growth. The fact is that data will surprise a lot of casual observers. If you get your news from the wrong place, you're thinking the housing market is still tanking. You may have buyers and sellers who don't get it. So if you need to help buyers and sellers see the actual data, you should join us at Altos Research. People need your help for understanding a fast-changing real estate market, and they need to hear it from you. So go to altosresearch.com, book a free consult with our team. We will help you know how to talk about the market with your clients and prospects today. There's a link in the description below. Click that and let's get started. Happy New Year, everybody.